Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pullback on the Bitcoin chart after our kind of overheated pumping to the upside. Guys, let's just jump straight to the charts. And what you can see is that we are making quite a lot of progress on this weekly chart here, where we do see that we are still quite embedded above the Bollinger Band's midline on the weekly, and that has always been the case when we just have epic bull runs, guys. So I don't have any problem whatsoever to say that we are in a bull run. And I know a lot of people are very timid and very shy to say such a thing, but I've been saying as much ever since we essentially broke 20,000. And of course, the Alpha fam was buying down here. We were buying down here. We were scratching our heads right here. And we were calling for the pump over here with maybe an extended fake out that didn't happen. So shame on me. But overall, this market has just been going the direction that we've been talking about. And of course, while I personally wanted to be bullish up here, way back a month before the top of the market, I was calling for a massive drop in Bitcoin. That did, in fact, happen. We did just test the waters down here where I almost believed this was the bottom of the market. A lot of people were very angry at me just for resisting that idea and for suggesting that we were going to reject at this level, but ultimately we did. And then I've just been trying to protect the Alpha fam all the way down until I indicated that this was looking like a pretty good area just to try to buy. I didn't really recommend it until, in fact, that kind of 16K level. And then I was a little bit of a nervous Nelly at this second dip. I was just a little bit worried that we might drop down. But when we made that higher high off of that kind of double bottom there, then the rest has been history above these Bollinger Band midlines on the weekly. So, guys, the Alpha fam has been absolutely killing it. No one is perfect, but congratulations, guys. If you have been sticking with us over the last almost 2 years, then I think you've been doing pretty good, assuming that we've been able to manage our fears and also our greed. Guys, let's jump over to the 1 hour just to see what's going on as we are having a little bit of a pullback. And I think what I can do is just put on the previous chart just so that we can get a little perspective on what has been happening over the last day or so. And here you can see the previous chart, guys. This is the old one where we did push through this kind of a momentum pool up here, first to the downside. So that was a nice short. You know, we got a nice reaction right off my neutral point of control, pushed back up, went through the pool again. That was a permission to long. Got right up there to my bullish control zone. Another kind of boom moment up here, right? Boom here, boom here. You know, got a little reaction off of this one. And then came back down to the pool for a bit of a fake out. The fake out, you know, it just was trying to shake people out. It actually did continue to the downside. That was permission to short. And so, boom, right to our level, right again. And guys, another little bit of a fake out. And then again, permission to short. So overall, I would say off of 1, 2, 3, 4, 5, you know, 6 kind of areas where we would expect based upon the alpha system over here, we got 4 highly successful movements and 2 a little bit of fake outs there. You know, it happens, right? But overall, better than 50-50, right? And so the alpha system is again just killing it. Now, that was with an incredibly narrow momentum pool here, guys. You can see all these lines just overlapping each other, and you guys know I hate that kind of setup because it's too small to react. It's too small for your stop losses. But hey, I can still show you how it's working out. Let's go ahead and jump to the current 1 hour. And so this is the new one, guys. And you can see we have a little bit more of a robust momentum pool here, something a little bit beefier. This is what I like to see because then we get a nice clear idea. Are we picking up that momentum or not? We're not just zigzagging all over the place. We can actually see, are we above it or below it? And currently we are below the momentum pool, below the volatility pivot. And so even though we're getting a little bit of a retrace here, if we get kind of stuck below there, then that would be an indication perhaps to short. Now, one warning that I would give is that we do have this pretty juicy, buy wick over here where Bitcoin was just bought up, as it kind of flashed wicked to the downside. Now those don't always hold, and so I'm still going to stick to my principles on this. But if we do get above the volatility pivot at 30,279, and then we enter the momentum pool here around 30,302, that'll take us out of the bearish control zone, and we should be able to take that long to the other side of the pool, approximately 30,350. Again, very narrow, but at least as a scalp, that's possible. And getting embedded above there, it might take a while because we're going to have to wait for this Bollinger Band midline to come out. And so there might be, just a little chop over here. But if assuming that we get embedded above this area as the Bollinger Band midline comes down, then again, that's permission to long, perhaps to the neutral point of control, which either, we're going to get stuck over here and maybe just grab some liquidity and continue our way down, or we're going to be able to flip and then see if we can take out this liquidity up here and perhaps even conquer the bullish control zone. So those are our different game plans on the 1 hour. Of course, the 1 hour lines do update quite frequently, so they do degrade, right, over time. But you can see we're pushing up right here, just like I was warning about this buy wick. You can see we're getting a little bit of a buy wick right here. Does this end up being a fake out or not? I don't know. Are we going to get into the pool or not? We'll find out, but you can see that buy pressure just pushing us up there. And so this was exactly the scenario I was saying. This thing is just buying a little bit of time as these Bollinger Band midlines come down here. Probably going to check it and then either get wrecked or check it and get embedded and just go. So there you have it for the 1 hour. Guys, I think we can just take a look at its volatility. And, this is just garbage. This is garbage volatility. I mean, it's obviously flipping, but I just can't tell what it's going to do from that. So, sorry. Yep, that's just how it goes. But overall, we do have the key levels. So if you dare to take this long at 30,300 up to 30,350 and then flipping that, continue with it. It's up to you, but currently, it's just a little bit sketch, a little bit sketch. In fact, you know what? I think I'm going to throw on the good old EMAs over here. And let's just see. Yeah, we're underneath the 21, underneath the 9, underneath the 4. Don't really like that. I do want to see us get above this general continuation line of 30,320 to put us solidly in between the 4 and the 9 for any hope of a squeeze to the upside. So could we just check out our lows again and then try again and then get into a squeeze? Yeah, I mean, it may just take a couple hours, guys, okay? So, again, this channel isn't about calling up or down. I'm just about observing conditions, looking for those validation lines, and then noting where we would have a confirmation, right? And you can see that these are the conditions, this is validation, and then getting into one of these squeezes would be confirmation to the upside. Otherwise, we're just borderline on our way to just drop again. All right, let's move on from the 1 hour and check out the good old 6 hour over here. Now you can see that we did have a incomplete pool move on the 6 hour, but it was fairly juicy. So I'm actually going to drop down to the 1 hour just to get some detail on the 6 hour pool that we had here. And you can see that while we were embedded underneath the Bollinger Band's midline there, that it was very possible for fake outs to easily occur. Okay, this is why I use the Bollinger Band's midline, guys. Look, you can see you're embedded below the Bollinger Band's midline right here. So you don't necessarily want to be longing until you get embedded above it. And since this is the 6 hour chart, you're gonna be trading on the 1 hour chart, right? You want a significantly lower time frame to get that detail. And so, as you can see, the first push into the pool was a fake out, but the second one off of this higher low was a qualified entry. That was a valid, entry signal for us, considering that we're below the volatility pivot. Those are not easy trades to the upside. The volatility pivot being above you suggests to the downside. If you're gonna take a long, you want the volatility pivot to be under you. But if it's above you, you can do it at the bottom of the pool with a qualified entry. But you just have to understand you don't always hit your target on those ones that are kind of going into the face of the volatility pivot. And so, sure enough, we did push significantly across the pool. And so, if you had taken that entry, then that would have been a 1.3%. So, you were doing 10x, then you got a 13% trade, right? So, pretty good. Not bad for a day's work, right? I mean, using the alpha strategy here, yeah, you broke even over a couple hours because you moved your stop loss to entry. If you took that one underneath the Bollinger Band, a little bit risky. If you took this one above the Bollinger Bands, then it was much more supported, and you got that 13% trade. But did you really hit the spot where you would want to take your profit? Well, yes and no, because more or less we did hit this general continuation line, and so that would have been an excellent zone to be looking to take some profit at. Just so happens we didn't reach the other side. We ended up coming back out of the pool. As you can see, we got embedded underneath the Bollinger Band's midline again, and then being under the volatility pivot and under the momentum pool, that was the short to take, okay? And you can see that with this condition and with this condition, when you took that short, yeah, there could have been a little bit of a scratchy kind of, exit here. These lines degraded over time, but you really, on the meaty move down, you didn't get stopped out, and we literally came up to our entry, but we didn't get stopped out on that pullback, but we did nail the bullish control zone here. So I would say, yeah, we got a successful trade. Yeah, we got a successful trade. Maybe one fake out here. Plenty of time to get out break even. Another fake out maybe here, depending on how you had your stop loss. That's kind of up to your risk management. But overall, I would say that the meaty movement was captured, and the meaty movement was captured between these two lines and between these two lines. And so the alpha system was working very well here, right? You didn't leave anything off on the table up here. You didn't leave anything on the table up here. You basically hit this zone and you hit this zone, and we can see that we're still embedded underneath that Bollinger Band's midline there. Guys, let's go ahead and update this because obviously things have changed. And you can see that at the start, I'll just go to the 6 hour again just so that we can see what it actually looks like. You can see that at the start, of this new 6 hour period that we just dropped like a rock because we opened up, of course, at the bottom of the hold momentum on the pool, but with a tiny little flick to the upside, just a wick, and then we just dropped like a rock underneath it, which is to be expected when you're underneath the volatility pivot here at a 30,888, and you're underneath the pool here at the 30,480. Now, should we be able to just, pull ourselves back up either on this candle or the next candle, then the re-entry above 30,480 would be permission to try to take this to the volatility pivot here at 30,888, if not to the other side here around 31,175-ish, let's say, and above 31,100 and let's just say 80, then potentially we're going to have continuation, and this was just a fake out. But for now, we are positioned a bit bearishly here. So just to be aware, especially as we're losing the bullish control zone on the 6 hour underneath 30,356. There's a chance that we just come down here and test the neutral point of control, and then we're going to have to see what happens from there, okay? So we're just watching this area. It's not particularly bullish at the moment, but we had a massive push up, so a little bit of consolidation after a massive push up is not unusual. And usually we make some type of, bull flag if we're going to continue upwards anyway. So, we may just be constructing a bit of a bull flag here. And I really wouldn't be too bearish on this chart, even if we're having pullbacks. We're just not there yet. As long as we are above the neutral point of control, technically bulls still have the advantage, and you do see that on this push up on this wick, this push up on this wick. Bulls just have the advantage, and yes, bears can keep pulling us down as more and more bulls take their profit. But ultimately, if this chart really is as bullish as that push to the upside suggested, right, then you would expect that these bulls would eventually step back in once it gets to a nice price. So we'll see what happens. A lot of liquidity on the table to try to chase to the downside. But again, if the chart remains bullish, then we're just going to potentially not even come back to that and just continue to push up, maybe come back to it later on, months later, who knows. And again, that would be my bias as long as we're above 29,559 on the 6 hour, and then especially if we're above 30,888 here above the volatility pivot. So, yep, that's the 6 hour for you. Guys, let's check out the previous daily, and you can see that the previous daily was just toying around with the top of its momentum pool when we first made it. Again, this is the old one. We're just doing a review here, and a little bit of a fake out there. But as you can see, it eventually ended up working out that it started to break down. I'll show you what that looks like on the daily itself. This is what we're talking about. So you can see a little bit of a fake out, like trying to get out of that pool. The bulls really tried. It's just that they failed. And just on a candle body basis, the pool was completely correct. We entered the pool, and then we're just going down to this volatility pivot here. Now, this does suggest that we should at least get to the significant key levels in between the pool, or to the other side should we breach these levels, okay? That would help us take a lot of this liquidity off the table and would give us rocket fuel to the upside. So again, I'm not too freaked out as long as we're above 28.5, and just to preferably as long as we're above 29,500. I think there's no big deal whatsoever. As you can see, bulls have the advantage above 27,386. So just to swim around in the pool to kind of make a bull flag or something, some type of wedge or something, no big deal. We could still just shoot off of that, right? just the nature of trading. After a big push to the upside, a lot of people like to put a little bit of money in their pocket, right? So they're going to take a little bit off the table, and we're going to have pullbacks until the next bulls step in and just to buy it up. So let's see what our new levels are on the daily here, and does anything really change? We can say the neutral point of control came up to 27.8. Let's see, did it actually come up? Or yeah, it did come up. It came up to 27.8. And we can see now that really we do want to stay above, let's just say 29,300. And, if we're going to have some type of continuation, then, 30,500-ish is kind of the area we want to see us getting embedded above. But we're still properly above the bullish control zone at 29,590. So a little bit of a dip, no worries. Don't really lose any significant momentum until under 29,310. And even if we had a little bit of a flash wick just to kind of fake people out again to that like 28.5 or something, not really any skin off of our back as long as this bull flag continues. And that bull flag, should it be formed, that could take us up to that 32, 33, maybe even 35 area. But we're just not going to count our chickens before they hatch. As you know, I'm seeing larger patterns to 42,000. So we just have to secure this area with some price action. We got to lock it down. And that's what these candles are about. Let's go ahead and jump over to the 3-day. And again, this is the old one. We just kind of rocketed off of that pool. So again, guys, you take a chance on the pools and they tend to serve you well. Above the volatility pivot, boom. Above the momentum pool, boom, right? So why not take a chance? Why not take a chance, guys, right? Anyway, that was the old one. You can see this is actually quite funny. You can see that based upon this old 3-day, we perfectly came down and tapped the bottom of the bullish control zone and still managed to hold it and get a nice bounce off of that. So on the 3-day bulls are really doing their job. They just have every key level. And so the 3-day bulls, they're just flaunting it, they're actually mocking the bears right now. Let's go ahead and take a look at an update, however. And yeah, the update looks a little bit more distressing just because of the depth of this momentum pool here. And you can see that should we lose that bullish control zone where we do have a little bit of support, as you can obviously see, then what could happen is that we end up just maybe swimming all the way down to the bottom of the pool at 27,900. Again, on the other time frames, that might just end up looking like a flash wick or a fake out or something to the downside. And then maybe we just bounce back as this Bollinger Band midline on the 3-day just kind of perhaps curls up, right? Curls up and just kind of supports while it lifts, right? And we get a nice bounce off of that, well above the neutral point of control at 27,000, that all important $27,000 level. And then, of course, our all important $30,000 level is essentially the two key levels that are battling it out right now. And so a little bit of a play between there, it's possible. And what we would end up doing is putting in a little bit of a bullish structure. I mean, this is actually a rising wedge if I think about it. But what I mean by bullish is that we could get another rise out of this, and then we'll have to see where it goes from there. So, yeah, maybe even deeper pullbacks later on. I don't know. But that's another conversation for much later, okay? Probably a couple weeks later. But for now, just looking for pullbacks, grabbing some liquidity, hanging on to this Bollinger Band midline, above 27.5 maybe, and then a bounce there. That was the 3-day. I think we can take a look at the week because the week did close. And let's go ahead and jump over here. So this was the previous week. Obviously, you can see that we did get that nice rocket off of the momentum pool, the bottom of the momentum pool there at 26.3. We really had liftoff off of 27.65. And then a normal place to just consider that we might face resistance would have been the volatility pivot at 29K. But in fact, we flipped that very bullishly. And so now from this older perspective, we're above the volatility pivot, above the momentum pool. And that's just super bullish again, guys. Nothing bad to say about this week's closure, doing really good things. If you look at where the Bollinger Band midline is headed, you can see that we could easily pull back to it and just continue to push off, okay? So let's go ahead and update this with a new one because that was the previous. And as you can see, we are just dipping back down into the pool. The bottom of the pool is there in that 28, 6, 28.8 range, which does suggest that we could have a little bit of a pullback just to grab that liquidity there. And, grabbing 50% of that liquidity or a little bit less is pretty bullish, actually. They don't need to grab all of it. They can leave some on the table and just use this as the rocket fuel to push up. So, if we do break under, 28,747, 28,667, then this might have been a failed move, right? As we find our way, perhaps pushing back down to 27 or 25.8 on the weekly, and maybe that was a double top if we breach those levels, because the definition of a double top would be if we breach the neckline, okay? Then it's a confirmed double top, and then I will be massively short on this chart. But as long as we're over, that kind of a $26,000 area, and definitely as long as we're over 27,500, and really as long as we're above 28,000, let's just say 800, preferably 29,500, then everything just looks, pretty gravy to me, okay? So not worried about this at all at this time. Just this is bullish still. All right, guys, I think that I am going to wrap it up there. Just wanted to double mention what I was talking about in the last episode, which is that we do have this potential cup and handle formation here, which could end up taking us to, let's be a little conservative here, $42,000 to $44,000, where we do have, perhaps some liquidity up there. And that could be the last hurrah before this thing ends up turning around, or it could be just the beginning. We'll have to measure it at that time, but I am kind of chasing this idea. And as you can see, just by the amount of liquidity right here and the fact that we grabbed some here, we grabbed some here, probably we're going to grab some here, right? And then that push will be the one that confirms the cup and handle, right? So I'm just mentioning conditions right now, and then we're going to have some type of validation, and then the actual push, right, with other indications will suggest whether or not it's been confirmed or not. Hope you didn't hear that jingle. I don't know what that was, but that was pretty loud. Let's go ahead and take a look at the weekly volatility. Yeah, I mean, so that would correspond with this volatility cross here, which you do see that we do have a confirmed cross here. And, should we get over 10%, then I would suggest whatever direction we're pushing on the weekly around this area, that's likely going to continue in that direction. As you can see, there can be fake outs below that threshold, which is why I mark it out at 20, but a 10 is usually front runnable. Again, just with the caveat that you can be faked out. And so we are going to be looking for that. Why? Because this is a massive, massive signal, which could give us huge upside, or alternatively, huge downside, okay? And by the way, I just want to mention that we had been following this volatility on the Stokes RSI itself. And guys, what did I mention? We needed 28,800 to turn back up. As soon as we breached that level, and as long as we're holding 28,800, then we are going to continue to be pointed in that upward direction. And of course, our volatility bias currently is going to be 29,450. So that is rising a bit as our price is going to be hanging out. So maybe I should just update this to 29,500-ish. But this was the point that we needed to turn around. We did get a nice bounce off of that. And so what could happen now that we've pivoted off of the Stoke RSI is that we could have a huge run to the upside, okay? Just like you see this rejection here that got turned to the downside, but we got this bounce that went to the upside. We could get another bounce that goes to the upside. And let's go ahead and just see what happened on this previous one. And if you do look at the previous one right here, what does that align with? Right about there. Oh, hey, look. That was pretty cool. That move was pretty cool, right? And if I zoom back out, you know, we can see that we had very low volatility on the chart at the time. And lo and behold, we have very low volatility on the weekly chart once again. So could history repeat itself? Well, volatility is direction neutral, but the Stoke RSI is not. So as long as we hold above that 29,500, guys, I'm bullish, right? I'm bullish. I've been bullish since 16,000. I took a chance at 15,500 and again at 17,000. And so the Alpha Fam is absolutely killing it. You're going to have some pullbacks on the chart, but overall, you know my philosophy. Guys, those are alpha for the day. Stay safe and happy trading.